Is the crypto bull market really over? Lately, we've seen a lot of fear, daily charts breaking down, sentiment turning bearish, and headlines warning about the next crash. But if we take a look at some of the fundamentals and macro data, those data don't line up with a full bear market yet. However, if we take a look at the price charts, there are certainly some warning signs on both the daily and weekly charts that suggest that the bull market may be over. So in this video, we'll be taking a quick look at some of the fundamentals, and towards the later part of the video, we'll take a look at the price charts. You will want to stay all the way to the end of the video because at the end of the video, I'll be sharing some of the key levels that I'm paying attention to and looking at to determine whether the bull market is really over. Let's start with the fundamentals. I'll be taking a look at these two factors. Of course, there are more than these two factors which affect the overall fundamental or macro picture of the crypto markets. But these two are some of the main drivers for the fundamentals, so we'll be taking a look at them. So when it comes to these two fundamentals, for liquidity and stablecoin market cap, both these factors suggest that the bull market is not over yet. So for liquidity, the global M2 money supply, which includes the US, China, Europe, and Japan, has actually increased around 10% since the start of the year. That's a sign of easing global liquidity, which is the exact opposite of what we typically see at the start of a bear market. So if we take a look at this chart over here, we see that at the start of 2025, M2 stands at around 89,650 billion. And as of this filming of this video, global total M2 stands at 95,740. So that's an around 10% increase since the start of the year. So overall liquidity is still increasing, even though recently there's a slight decline in the total M2. Stablecoin market cap has grown from around 250 billion to 300 billion in 2025. So this new supply indicates that there's fresh ammo sitting on the sidelines. In other words, it means new capital ready to enter the market. So from these two perspectives, this suggests that the bull market is not over just yet. But if we take a look at price action, this is where things start to look less comforting. While the weekly chart do not confirm a bear market just yet, on the daily time frame, crypto markets including Bitcoin and Ethereum are starting to look less constructive. We are seeing momentum slowing down, lower highs forming, the slope of the moving averages beginning to flatten or even curl down. All this suggests that short-term sentiment has flipped, and if this continues, the daily structure could transition from a normal correction into a downtrend. So while the macro factors is still relatively supportive, price action is hinting at exhaustion, at least in the short term. Now let's head over to the price chart and I'll share some of the key signs that I'm taking a look at. This is the price chart for Bitcoin, and this is on the weekly time frame. So if you take a look at this price chart, there's one key moving average that I'm paying attention to for Bitcoin on the weekly time frame, and that is the 40-week moving average. So the 40-week moving average is this yellow line over here. So the reason why I'm taking a look to this 40-week moving average very closely is because if you zoom out and take a look at Bitcoin since the start of its current uptrend, right? So we can see that this was the bottom, and after that, Bitcoin started its move up. So you can see that the uptrend actually started during this period over here. And what do you notice during this uptrend? So if you take a look at the price chart, during this uptrend, Bitcoin has found support and traded above the 40-week moving average consistently for the past 2+ years, right? So if you take a look at the chart over here, ever since it made its first up move, prices have found support at the 40-week moving average whenever prices decline to that moving average. So we can see this was the first time, right? So prices actually declined towards the 40-week moving average, and you can see that the 40-week moving average served as support and prices managed to find support and bounce back. So that was the first time. This was the second time. This was the third time. So there was a undercut over here, but you can see that prices actually quickly recover back above the 40-week moving average. So this was another time. And right now, Bitcoin is actually trading at its 40-week moving average. So this 40-week moving average serves as a line in the sand for Bitcoin on the weekly time frame. So if Bitcoin breaks below this 40-week moving average and it can't trade back above, this to me will suggest that the bull market is over. But as of now, Bitcoin is still trading above the 40-week moving average, which is why on the weekly time frame, based on the price chart, it suggests that the bull market is not over just yet. But if we take a look at the daily time frame, there are warning signs which suggest that the move might be over. One of the main warning signs that I'm paying attention to is how Bitcoin's recent rally is always feeble, and when it comes to declines, the declines are way stronger than the rallies. So a perfect example is during this period over here, which is the past 1 month, right? So if we take a look at the chart, this was the rally. This rally was feeble relative to this decline. And over here, whatever gains that Bitcoin managed to achieve during this rally was totally erased during this decline. And for the most recent rally over here, you can see that the rally was very feeble. Within one trading session, prices managed to erase all of the gains that was achieved during these 3 trading sessions. So what this Bitcoin daily chart suggests that when Bitcoin is rallying, it is taking the steps up. But when it is declining, it's taking the lift or elevator down. So that is one of the main warning signs that is flashing to me on Bitcoin's daily price chart. Now let's take a look at Ethereum. So for Ethereum daily price chart, you can also see the same thing happening. We have a relatively muted rally, and the decline erased all of the gains that was achieved during this rally. Same thing over here for this rally and this decline, and similar for this rally and then this decline. And then the most recent rally, you can see that it was relatively feeble compared to the decline over here. Another warning sign on the Ethereum price chart is how prices are breaking below this 150-day moving average over here. So the 150-day moving average is this white line. And if we zoom out over here, since the rally that started in April, Ethereum has managed to trade above the 150-day moving average. We can see that this 150-day moving average is a key level for Ethereum, right? So if we take a look over here, Ethereum found support at this 150-day moving average. And then when it broke below the 150-day moving average, that 150-day moving average become resistance, and then prices encounter resistance and bounce back down. Again, it found support at this 150-day moving average. And when it finally broke below the 150-day moving average, what subsequently happened was a steep decline for Ethereum. So based on past price action, we can see that this 150-day moving average is a key level for Ethereum. And Ethereum breaking below this key level on higher than average volume, right? So if you see the volume over here was higher than average, it's not a positive sign for Ethereum. And if we take a look at the weekly time frame, Ethereum has generally respected the 10-week moving average. So the 10-week moving average is the red line over here. And you can see how this 10-week moving average serves as an indicator of the intermediate trend for Ethereum. When prices are trading above this 10-week moving average, the intermediate trend is up. When prices trade below the moving average, it is on an intermediate downtrend. Same thing over here, prices trade above the 10-week moving average, suggesting that the intermediate trend is up. And when prices start trading below the 10-week moving average, it suggests that the intermediate trend is down over here and for over here. And finally, for this recent up move, Ethereum was trading above this 10-week moving average. But over here, towards the start of October, prices traded below this 10-week moving average, and it has not yet reclaimed back above the moving average since. So is the crypto bull market over? Not yet. But the daily and weekly charts are showing fatigue, and we are inching closer to the tipping point where the fundamentals and price could finally diverge. If you found this breakdown useful, hit the like button, subscribe, and let me know in the comments. Do you think we are still in a bull market, or has the bear market already started creeping in?